So welcome today, and before we start the session, and before I also ask my panelists to introduce themselves, I had some opening remarks that I'd like to share with you. So Africa stands at a critical crossroads in the climate finance space, and the continent needs more than $200 billion each year to meet its climate goals. Yet today, it receives less than a quarter of that. So most of the money comes from international public institutions, while private investors remain hesitant and local capital, despite trillions in African pension and insurance assets, barely touches climate solutions. So the flow we do see are uneven, concentrated in a few countries and a few sectors, leaving vulnerable communities with very little support. Women, young women, and grassroots innovators are often locked out of funding, even though they are closest to the solutions. Here there is sparks of hope. Climate technology has shown one of the Africa's fast-growing investment sectors. New funds are backing women-led ventures, and development institutions are experimenting ways to de-risk early-stage innovation. So the real challenge is not only how much money flows, but how quickly, fairly, and inclusively it reaches the ground. So the future of African climate resilience will be defined by whether global partners honor their pledges and whether African institutions mobilize their own capital to scale homegrown solutions. So at this juncture, those were just my few opening remarks. I'll let my panelists introduce themselves. So,
good morning, everybody. I'm Lisa Thomas. I'm the co-founder and a partner at ATG Samata. We're a gender lens venture fund focused on East and Southern Africa, and we have a focus on 3 key sectors: value-added ag, technology, and of course, climate. And we really like it where we can intersect at least 2 of those sectors or 3 of them. I also am the co-founder of AWI, which is a support organization for first-time and emerging female managers on the continent. And I bring that up here only because a number of our funds, and we'll probably talk about this a bit, are also focused on climate. So we have over 150 members, and I would say at least 30% have a climate vertical in some way, shape, or form within their fund thesis. So there's more coming out in the market. And then I also sit on one of the British International Investments ICs called the Catalyst, and we actually look at a lot of the climate things that are the climate investments that come through BII.
thank you so much, Melanie.
Good morning, everyone. Much better. Very nice to be here in Africa Arena for the 60th time, but this time I'm not raising a seed round again, so good to see you all. My name is Melanie Keita. I'm the CEO and co-founder of Melanin Capital Neobank. We are a fintech that offers digital loans, mostly to the green economy and the food value chain. We have our partner here, the GIZ SAIS, that helps us to provide loans towards agri-techs, and this way we can provide loans to farmers, and we also provide carbon credits. So we've been raising climate finance since 2021, mostly raised around $1.2 million, and now closing a seed round of $5 million. Excited to be talking more about the state of climate finance and what we can do. Thank you.
Good morning. Good morning, everyone. So my name is Joel Wanjohi. For those who are first time in Nairobi, feel welcome. I'm Kenyan. So I do work with Equator Venture Capital as investment director. At Equator Venture Capital, we do support startups which are trying to be innovative in terms of providing climate solutions. Mostly we focus in the sectors within sustainable agri, mobility, as well as transport, and also sustainable energy. We do look at investments between seed and Series A stage across sub-Saharan Africa. So if you are one of the entrepreneurs looking for this climate finance and you think your business is quite climate innovative, please see me within the session or talk to some of my colleagues who are also in the session. So looking forward to fruitful discussion.
Thank you so much, and I'm so glad to hear you saying that anyone who's raising, they can just come and see. It means there's money. So I think the first thing that we want to talk about, we've had a lot of ventures saying, they don't know where is the money, but somehow it's flowing into some people or some ventures, either with, who are backed by white in their boards or things like that. So from an African context, when we talk about where is the money, what can we say today?
So thanks. So let me start on my side. So first, to put some context in terms of climate finance, these are the resources, of course, which are going towards the climate changes. And I think what we know, of course, there has been an impact of changes within Africa, where we have seen where we require some. Okay. Sorry for that, yeah. So technically what I was saying is that we have a need for the climate finance in Africa. We put some numbers in terms of the required capital in Africa to be somewhere closer to 300 billion. And where we have seen much of this money coming from, of course, today is still from multilateral development banks like IFC, AFDB, among others. We have also seen a few governments within the Africa, particularly within Kenya, Nigeria, as well as Egypt, raising some of the sovereign green bonds. We have also seen a few private equity investors, including venture capitals, who are also trying to bridge these gaps and support startups, including people like Equator Ventures, among other, climate VCs. So I would say these are the sources we are seeing climate finance flowing into Africa. In terms of the structure, we are seeing much of it coming from a concessional, loans point of view. We have seen a number of grants also flowing into Africa. And also we have seen in terms of, equity and also venture debt flowing to private entrepreneurs.
Thank you so much. Melanie, what's your take on it?
Allow me to give the take of someone who tried to raise that kind of money for a lot of time. I would say that, yes, there is still there is $50 billion that are being invested annually towards funds and private equity funds and VC funds in particular. But at the moment, it's for a lot of the founders that are here that maybe are early stage and trying to raise, it's not always as easy to access. We have the Catalyst funds here that are actually the ones focusing on those very early stage type of tickets. But if you're raising less than $500,000 or $1 million, it's just a little bit challenging to access. So to see the states of climate finance, I agree with Joel here. It's mostly with DFIs, and those development finance institutions don't invest in startups directly. So you have to follow basically where the money is coming from, looking at these institutions. So when you see private equity news and you see that IFC or the Green Climate Funds has invested in a fund or in a bank, this is where you can access from. The key challenges that founders still face, when you look at lately the latest news, we had local banks that access money from the Green Climate Fund, for instance. It's still for very large tickets, so a minimum of $2 million, $3 million with very strong guarantee requirements. So I always kind of like advise to go through accelerator programs or like programs like we have with DG, Develop PPP or GIZ SAIS, because they have partners that are specialized to finance early stage companies. So in the case of GIZ SAIS, they partnered with us so that we can provide affordable loans to the agri-techs and the climate techs of their portfolio. And that allows us to basically help them to reach profitability as they are looking to raise VC funds. It's a statistic, but it's also a feeling. VC funds is getting more and more tired, and so you kind of see the usual suspects being financed, which is why you're mentioning the tiredness or the frustration of a lot of founders. But it's there is hope in the sense that there is more and more actors that are coming in, more and more fintechs, more and more development financial institutions that comes with programs and partner with funds like my colleagues who are coming in at earlier stage. But it requires some due diligence.
I'll just add a little bit more to each of these things. I think it is challenging, right? The fact that you have to wait for the money to trickle down, right? That's really hard. And especially when we also have a pretty large player in the market who is also pulled back, right? So who is coming in to fill that gap as well? But there are a lot of great programs that are going. You mentioned GIZ. I've heard GIZ's name come over and over and over again with all these fantastic different programs. There's another one that they're doing with Goodwill, which is actually financing startups here in Kenya. And so I think it is challenging, right, to have to wait for the value chain to actually connect all of the dots and all the parts together. But I do want to go back that there are a lot of folks who are out there who, in some cases, the usual suspects, but there are new funds that are coming to the market who they're raising a smaller ticket, so maybe it's a $20 million fund or a $50 million fund, and they are looking very specifically at this because they know that they can tap into climate. Does that mean they're going to have money tomorrow? Not necessarily, but they're also syndicating those deals. And so I think making sure that you're really aware of who the new funds are out in the market that might be doing some of these early stage tickets is a good idea. There's resources to find those funds as well. As I mentioned, AWI, which is Advancing Women in Investing, we have a showcase on our website, and it lists the strategies of a big, huge portion of our members, and climate is a big one in a lot of those as well. And a lot of those funds are actually, syndicating, or they're actually able to get track record money to be able to make climate investments. And that's something that we have been able to see in the market as well. And I think, too, going back to also one last thing around the financial institutions, we actually invested in a company in Zambia. It is a fintech. They have a ring-fenced portfolio specifically for climate. And so I think we're going to see a lot more financial institutions, probably more the fintechs, that are really starting to target this space as well, because it's not always just about the equity. It's also about how do you access that debt, particularly if you're in the other part of the climate space that takes a little bit more infrastructure.
Thank you so much. And I think I'd like to tap into your knowledge in terms of, we've seen a lot of capital that is flowing in the ecosystem just being debt. We are not seeing a lot of equity investments in the system. When you look at the commercial institutions, they mainly just invest in debt. And as an early startup in the climate space, it's very hard for me to know if I want debt at this particular point, because maybe I can't even service it. So as you digest that, I'll also want us to discuss about what's missing, what are the kind of challenges that you're currently seeing, because you're deploying capital. Do we have enough ready startups to absorb the capital, or is it that we lack enough innovations to be able to fund?
Probably I could start by answering that. I think what we are seeing in terms of some of the startups we are supporting, one of the key challenges, of course, the cost of capital and also the issues around the foreign currency, where most of these businesses' revenue are based on the local currency, while some of these facilities which they are able to get it from the bank, they are probably priced through hard currency. So these are big challenge we are seeing across our portfolio and the companies we are supporting. Well, recently we have seen a number of DFIs coming up with innovative way of supporting them, coming up with fast losses and guarantee, which enables this company to be able to access more funding. The other thing, of course, I wanted to mention is more about the scale. If you look at the businesses which you do support, most of them, they are still struggling in terms of generating cash flows, and most of them are still making losses, meaning a number of the dollars they are raising is just going to funding the operations instead of either funding the working capital or even funding the capital infrastructure in terms of the scale-up. I think based on this, we still require more of equity investors supporting this company early on, or even venture debt, which is actually absent in Africa as we talk, to continue supporting some of these startups as they gear towards the scale to be able to be ripe for these commercial institutions.
Yeah, I agree, and I just want to add on what Joel said and take a step back of like what type of companies we're talking when we talk about climate tech as well. Like when you look at our markets, most of the time you see a lot of kind of distributorship, right? We import solar panels, we import electric vehicle from China, and then we sell it to our markets on credit. So what we need mostly is a lot more of inventory financing, a lot more letter of credit, very basic and very boring type of instruments, right? And this is what the banks could have done since the beginning. It's really not complicated, it's very lucrative, but banks are unable to comprehend the type of businesses that we have. And that's the main shocker that I see most of the time with our businesses. So the banks would rather finance fintechs like us, and we finance those climate tech, than actually having to do it themselves. And what happens is that when you look into even how the banks are structured with their process, most of them cannot even finance Chinese equipment, which is a very big issue because 80% or 90% of what we distribute here in Kenya and even in other countries is Chinese equipment. The second part is they do not recognize those assets as collateral. So you actually have to put 90% of cash deposit or collateral of the like of the land or vehicles, which is not possible for the majority of our companies. And then the last part is, of course, the pricing. So when you look here in Kenya, you are around 8% annually on the dollar, 17% on the Kenya shilling, but this funding is locked. What Joel mentioned is that now you go with foreign currency funding, and very quickly you get at 18, 20% on the dollar, which now makes the margins almost impossible to make. So I think that what's missing at the moment is, in particular, affordable debt and affordable debt financing in local currency. That's really critical. The second aspect is carbon credits, off-takers, and I'm going to explain more on that. We've been tapping on carbon credits just this year, and we can see that there is a huge demand from European, Asian, and American companies to buy carbon credits from Africa so that they can be able to offset the carbon but also remove carbon. And Africa has particularly high quality carbon credits. We do it mostly with farmers. It has a lot of community impact. It is mostly removal and not mitigation. So there is a big opportunity for us to access funding that is cheap but not concessional, that is actually commercially driven. But we haven't put yet the right structures to have off-takers who buy carbon credits locally. Total, Shell, all of those companies that buy carbon credits, they sit in America or in Asia. They're not, the actual teams are not in Kenya or in Ivory Coast or in Nigeria. So when we're negotiating those carbon credits, we're negotiating abroad. And those are the key institutions that DFIs, in my opinion, should push, helping corporates, even corporates from their own countries, to buy carbon credits locally instead of just trying to do over and over the same deals. Because what we've seen so far is over and over the same deals, except some institutions that I mentioned earlier that were trying new things. So there is still a big need. Kenya is a big recipient. We've not even talked about Francophone Africa, which you can hear is coming from me. We've not talked about some other Northern Africa as well that is completely untapped. And that is because we are continuously also a bit doing the same thing. And that's what I want to see change in the next years.
Thank you so much. So I think I want to speak about something that is close to Lisa's heart, and this is about if climate finance is actually just inclusive. And just to answer the questions of, out of 100% of all the capital that is deployed, how much of that goes to women?
Oh, very little. And we know that's true, right? So if you look at the statistics, and this isn't specific to the climate space, we're applying this across, but in Africa, less than 1% of capital goes to female-led companies. Less than 18% of capital goes to gender diverse teams. And yet more than 50% of the high-growth scalable companies on the continent have at least one female co-founder. So there's a bit of a gap here between who's actually starting companies that are viable and who's getting access to the capital. This has been true for a long time. We've been talking about this for a very long time. But I think it's particularly important in the climate discussion because women are disproportionately affected by climate in a lot of ways. But I actually had to have a conversation with someone recently about why that is, they were like, that can't be true. That's not true. Yes, it is. If we look at the lower incomes typically that women have, the fact that they don't have always ownership of property, they just are less resilient to climate shocks in general. In addition, they very often tend to be in the income generating activities that they have, it's in climate affected spaces. So for example, agriculture. That doesn't mean that men aren't there. They absolutely are. But if we think about where women have their jobs in Africa, a lot of them are impacted by climate. And I can go on and on with the list. I think we know this. And so I think one of the things that we really have to think about differently in climate is how do we make sure that capital is distributed in an inclusive way, that the companies that are receiving the capital are gender diverse and are taking steps to ensure that diversity and inclusion is actually being built out into their cultures so that we are impacting women on the ground as well. And so I certainly see a lot of those companies around doing a lot of really fantastic work, but they also struggle to get access to capital if they have a female founder, unfortunately. So we do a lot of digging in and coaching, and one of the things that we also do, which I don't know if every VC does this, but we've got a link on our website. Just come and apply, and we will at least get back to you on whether or not you're a fit. And we've also found that we get a lot more women that way as well. So certainly through word of mouth and talking to other entrepreneurs. But I think if we as investors want to make sure that we're getting to the women, we need to do things differently about how we go and find the companies for our pipeline. And so this is more of a cautionary tale than anything else. But I think we as climate investors need to make sure that we're doing things in a way that are different than how we did it previously to ensure that everybody is equally impacted by the funding that is meant to actually impact everybody.
Melanie, do you have different statistics?
I'm sitting in a chair where I tend to agree about the issue of women accessing to finance. We're very accelerated, though. We have a lot of incubators. I think I've been coached the most in the past 4 years than in my entire 32 years. But I think I want to play the devil advocate in the sense that I feel that a lot of VCs and PE funds have implemented a lot of methodologies to invest in women, but it's also not all African women are. Like, not all African women have VC-backed companies type of investments. There's a lot of them that are in the farms, that are in the markets, and I feel that we are forgetting the statistics. Like, for example, we finance Coolbox solar fridges. They'll basically sell their fridges on credit to 80% women. It's a statistic that is completely ignored. And I think that if we want to be as inclusive as possible, if development finance institutions want to be as inclusive as possible, they have to take into account that there is a full value chain of financing that is happening from the VC to then the companies, venture-backed companies that they support, and then the credits that those companies offer or provide indirectly through those assets to women farmers or to women market traders. So there, I think we could see a little bit more improvement, because otherwise it's very depressing. But yeah, at the moment, if you look at the VC stage, we are still at 8%. And now if you look at also local founders, the ones that are not expats or repats, you'll get at a lower percentage, because let's also be clear, it's a topic that is a bit of an elitist topic as well. It's a lot of topics where you need to be VC backable, so you need to be able to have a certain type of education, you need to have a certain type of exposure. It's not for everyone in Africa. So that's why we have such statistics, if we want to be very honest. And I think that this is, we can be very pragmatic and understand that for certain instruments, VCs and PEs, this is the type of funders that we are seeing, and we can improve it with new methodologies. But if we want to support the masses, we have to look at also other instruments and see how it impacts them.
Are you seeing anything different at Equity VC in terms of the people that apply, the companies that you've supported? What are you currently looking at?
So in terms of the gender inclusivity, I think we are quite intentional when we are trying to do investments. This is some of the metrics we do try to monitor. What I wanted to say different from what Mariana said and Risa has said is, other than, of course, looking at the founder or probably the governance, we're also trying to look at how the money is trickling down to the various users. One of the portfolio companies we have supported, Sunculture, who supports small-scale farmers. About 60% of these farmers are women. So this is something we are seeing across the, a few portfolios we are supporting, much of the trickle-down getting into the women.
Okay, that's very interesting. So I think I want to move on, and I want to talk about the role of DFIs and equity, private equity, including venture capital, into the ecosystem. So are we having more local or global funds looking to climate finance, and what's your take on it?
Okay, I'll start. So yes, in general, I think there's certainly more funds that have started with this element they're trying to get backed. But I think there's still a disconnect, right? So if we talk about the entire investment value chain, we're in an uncertain world right now. So DFIs are actually being a bit more cautious. They're putting more capital back into the folks that they already know, which means that, yeah, some of those folks are probably adopting some climate strategies, but the real innovative strategies are usually from the emerging managers, right? They've seen a gap in the market in the same way that an entrepreneur sees a gap in a market and goes after it. So an emerging manager would do the same thing. That's a high-risk profile, right? Emerging manager, ooh, climate, we don't have a huge track record in that in general. Ooh, Africa, And so we certainly still have, I think, from the DFI level, there's not a huge amount of capital that is necessarily going into the areas that we need to. Certainly, we've got the GIZs in the world that are doing different programs that are providing particularly access to debt, which I think is really important, and guarantees and different things like this. But there does need to be more equity, particularly in the climate tech space. We do need to have that. So we're slowly seeing that come. There's 2 different programs at BII that are really focused on this. But BII is a very big institution, right? So they're not going to do the direct investments into the climate tech space that, say, my fund would do. And so just like what you were talking about before, we've got to get these folks to invest in funds like ours that we can invest in the entrepreneurs that are a little bit smaller, doing that $250,000 ticket, right? So that kind of thing. So I would say it's still a gap. We need more local capital to come in and play in here. And so I think there is a bit more traction coming from some of the local DFIs in various countries as well. So the local DFIs in Africa and the pension funds in Africa are starting to look a little bit more investing into some of these markets. VC is still a little bit risky for them. They're probably looking more at the PE space, but we are seeing more of that movement. And I do think that we have this opportunity to encourage people more. Where are some of those risk-sharing mechanisms, like the guarantee schemes that we talked about? That's what the DFIs can do. It's set up a risk-sharing mechanism for some of the local DFIs, more of the local players, to come into some of these pieces. And so I think I'll pause there because I know you guys have lots to say, and I will probably say the same thing. So.
Thank you. I fully agree. I think it is shocking that we still have to have this conversation about local capital, in particular in a sector that is, in my opinion, not as risky, like climate tech, which is a lot of solar, it's a lot of asset-based finance. This is something that a lot of local investors should have come into. Only 10% of the capital in climate at the moment is local, and it doesn't make sense. It doesn't make sense from a pricing perspective because we're getting debt abroad at like 17, 18%. It just is completely outside what we should have locally. It doesn't make sense because when you have a president that comes up on the other side of the world, then we're getting half of our funding away and we have to completely rebuild our strategy. It doesn't make sense either from an understanding perspective, because of course local investors will understand better when we say that we're financing boda bodas than someone in the middle of Texas. So we have to make sure that even in the Africa Arena event, we get more banks, we get more local pension funds who are willing to get involved into the climate sector, who understand the returns and the, let's say, time frame that they can get those returns. And yeah, I think it's now very urgent that we stop to always go outside, and we see more synergies even with DFIs and forcing their banks to come on board, in my opinion.
Yes, I think I concur with my colleagues here. We still need more of local funding. I think what we have seen from most of the local institutions is they are shying away in terms of supporting some of these startups because either of the risk weighting of these various assets. Most of them, they are also not yet, been able to work around in terms of the return perspective of a climate tech, asset. What I mean by this, if you look at, the e-mobility space, or even look at probably even on, I would say a solar irrigation asset. When you look at the return profile, the payback period is slightly longer than what we have seen for the traditional petrol or diesel assets. And most of the local institutions have not been able to familiarize themselves with this, and they are shying away from this. So we need, of course, a bit of support from the MDBs and the DFIs to these institutions so that they can be able to come up with innovative structures to support some of these startups.
And I'm just going to make one more comment. There's, and some people in the room may be familiar with this, but there's the Mission 300 program from the World Bank and African Development Bank. Now, on the face of it, you're like, how does this really, focus on climate? But given how energy is actually created and delivered in Africa, this is a huge climate focus, right? This is going to be distributed renewable energy. And some of those are going to be really big projects, but some of them are going to be a lot smaller. So I think we are going to see more of that capital moving into funds that can also get to climate tech companies. And because electrification in Africa is climate, it has to be climate resilient because we're not going to be able to create it in any other way. So I think we should be looking at some of these things that might, on its face, not seem climate related initially, and then see how we can dig in and how we can connect. And I think that's how we can do it.
So thank you so much. I know there's a lot that we can continue saying about climate finance, and we can never exhaust this topic because, we have new things and new challenges and new developments that come in every day. So at this point, I'd like to ask my panelists each to give their closing remarks. We can start with you, Joel.
Thank you. I think we all agree climate finance is growing in Africa, and what we need is just to breed the various institutions supporting this. So collaborations between the DFIs, the multilateral development, the private equity, the family offices, we all need to work together towards this, and I do believe we are on the right track.
Thank you.
I think I'll give my closing remarks to all the founders in the room. Hang on in there. We can make it. It's going to be fine. VCs and private equity funds will always be there if you're making profits, so just focus on profits at the moment. We are coming into an era that is dry, maybe one of the driest we've seen, but we still have a huge demand. So let's make sure that we refinance ourselves through our revenues, and let's see when the VCs are ready again, we'll be here and most powerful than ever. Thank you.
Thank you. Oh, that's tough. Oh, that's true, though. But I'll leave us on a high note in that I think climate tech in Africa has the opportunity to be super innovative. And we've seen these kinds of things come out of African markets before, African entrepreneurs. And I think this is a particular area where the continent can really lead. And I'm super excited to be here to do that. So if you are a climate entrepreneur, you got to be at least gender diverse team, guys. You have to be at least a gender diverse team. You can come to atgsamata.com and fill out our form, and we'd love to talk to you.
Thank you so much. So as we close, I want us all to remember that climate finance in Africa is just about filling a funding gap. It is also redesigning the system that the capital flows are bigger, faster, fairer, and also more inclusive. So this is not a charity question. It is an investment in resilient innovation and shared prosperity. So the money is out there. The solutions are here. The only question is whether we can align the two in time. Thank you so much for listening to us, and have a nice day.